First of all, just to thank Deputy Harkin for producing this bill and the independent group for facilitating its discussion. This bill recognises the value of credit unions as volunteer-led community financial cooperatives and enables them to provide a greater range of services to members. Credit unions offer an incredibly important service in communities. We have one of the highest percentages of population who are members of the credit unions globally. Irish people deeply value and use their credit unions. Unfortunately, the legal and regulatory framework has not reflected this. There is a pressing need for this type of reform outlined in the bill. Not only should all deputies support it, but the government should facilitate its passing as soon as possible. Credit unions provide local services and help whole cohorts who would otherwise be financially excluded. I was only able to do a master's due to the support of Skibbereen Credit Union, and there are so many more individuals and families who are dependent on the financial facilities offered. Credit unions also help migrant and vulnerable groups enter financial systems. They are also more accessible with branches in towns and villages. At a time when commercial banks are leaving the Irish market and the remaining banks are closing rural branches, credit unions have never been so important. Something of significance for many people is that you'll be guaranteed to meet a staff member and not be directed to a machine. All of this is possible because credit unions are part of a volunteer-led movement with principles of inclusion, shared benefits and service to members and the community. Unfortunately, current financial regulations fail to appreciate their function as cooperatives and the importance of the common bond. Instead, they have excessive limits on their services and their potential. They are actively increasing their provision of finance in areas of SME, business lending and mortgages. Many are ready to provide much needed services to local enterprises, family businesses and to help address the housing crisis. And in doing so would also increase their viability and benefit their members. It's a win-win situation. However, they are restricted by the concentration limits in the 2019 regulatory requirements, which put artificial and anti-business controls in place on how much credit unions can lend for these purposes. These artificial limits need to be removed, and the credit unions can be overseen by supervisory and reporting tools rather than legislative barriers. Moreover, Irish credit unions are subject to harsh capital requirements considering the profile of their balance sheets. International credit union frameworks and the rules for competing financial institutions. This regime was brought in during the financial crash and has never been properly justified. The Credit Union CEO Forum and the ILCU both have extensive reports highlighting this problem and suggesting more appropriate systems that reflect international best practice. I do recognise Mr Fleming's work and commitment to reform of the framework surrounding this sector, but I encourage you to help resolve these specific topics that I've raised in the meantime. The Credit Union Bill provides structures to deal with issues like these, not only resolving them, but also creating an architecture to respond to matters as they arise, rather than having to wait years for them to be addressed. It is exactly the type of process this sector should have, reflecting credit unions' role in Irish society and helping them to thrive. The establishment of a Credit Union Policy Committee would provide a vital connector between credit unions and the central bank by reviewing and advising on the impact of policy. Complementing this are the provisions which allow for the return of that link between the Minister for Finance and credit unions. Currently, there is a disconnect between the Department of Finance, which has responsibility for credit union policy, and the Central Bank, which is responsible for regulation but has no remit to appreciate their volunteer-led democratic organisation. And Minister, in your response earlier, you attempted to represent Deputy Harkin's bill as facilitating political interference in financial regulation. And I think you know that's not what this bill is about. You heard Deputy Harkin make that exact distinction. She is asking for an official ministerial role in the process to create checks and balances, not interference. The bill helps address this with the requirement that the central bank obtains the consent of the Minister for Finance when prescribing the minimum regulatory reserve requirements for credit unions. Also, the importance of the section that values the common bond is essential. The common bond is the priceless solidarity that drives credit unions' philosophy, ensures that it is focused on the needs of members and helps protect its community. Crucially, the bill proposes that the central bank will regulate credit unions in an appropriate way that recognises them as volunteer-led organisation and community banking providers. Yes, they must be subjected to very clear and robust regulation. Nobody disputes that, something that the sector seeks, but credit unions cannot be treated the same way as commercial banks. This point can't be overemphasised. One of the most significant threats to the viability of credit unions is the regulatory regime. There seems to be an inequity between the treatment of the big players, banks, vulture funds and insurance companies, and the measures credit unions as local organisations are subjected to. At a time when commercial banks are closing branches and withdrawing from the market altogether for profit reasons, credit unions are being restricted by limits on business and mortgage lending, a harsh capital regime and liquidity requirements on longer-term lending. While these particular matters must be resolved, there is a pressing need for larger reforms that enable and direct the central bank to regulate credit unions as financial cooperatives, not commercial banks. This bill provides excellent structures developed with the sector that will provide long-term solutions and help ensure the viability of credit unions. If you value credit unions, I think you must support this bill. And finally, Chair, I must just express my frustration at the government's response with another motion to delay a bill from a member of the opposition. We had the same 2 weeks ago with the Autism Spectrum Disorder Bill being pushed back by a year. So previously the government had counter motions to the opposition, but when that became too unpalatable, they just let motions pass and didn't act on them. And the latest tactic seems to be to delay opposition legislation. It will take months for this bill to progress through the different stages without government interference. Why can't it just happen concurrently with the development of a new framework? This bill provides many of the solutions credit unions need today, and delay is willfully putting more credit unions at risk. I simply can't understand why the Minister who claims to want to support credit unions would want to delay legislation like this designed to specifically assist them. This bill will enable a better, more appropriate architecture to oversee credit unions, which acknowledges their vital and unique role while also facilitating them to provide SME and mortgage lending. I urge you, Minister, to withdraw your motion and for all deputies to support credit unions. Thank you, Chair.
Deputy. So we're moving to